Hello and good morning. I welcome you to the morning meeting today on Thursday, the 11th of January 2018. I'm sorry. This is Jens Klatt speaking and exclusively presenting this format to you for JFD Brokers as their global head of research. So yeah, we want to have a look at the markets and then how things are going after yesterday's, well, it wasn't really a shock move, but it was more like markets became a little nervous, let's say. A little nervous because the Chinese came out and said that they are probably stepping back, not completely, but probably also completely, as a buyer of US treasuries here. And as you may have seen, there was some big volatility in the US dollar based on that comment. So here you can see, for example, EUR/USD on a 4-hour chart. You can see that the market here, that was the news on Bloomberg, that the euro pushed up towards 120 and above that level and was sold again. So what you can see here, so EUR/USD here dropped again. So what you can see here is that obviously the market stabilizes right now. So there's also something you can see in dollar-Japanese yen, for example, which came under quite strong pressure yesterday, but is right now stabilizing here, even though below 112, which is probably one sign that we are not yet done on the downside, but there's further potential then for another leg lower towards 110.80, 111 probably. And now the thing is that we get to see something similar in the equity markets, especially here in the DAX. You may remember in the morning we made in the DAX long or short, I came to the conclusion that probably it's not the best idea to right now go aggressively long or short, but instead step back a little, wait and see. And so far, yes, we are about to somehow form a bottom here. It looks promising at first, even though I'm still not yet convinced, because what I'd really like to see is a push below these lows here. And if the market then shows that it doesn't want to take on further momentum on the downside, then I could imagine to go DAX long from here and consider yesterday's push on the downside to be kind of a fake move then. Not sure whether it will push us as low as 13,100 points, but something like there. So something like 13,200, 150 probably. And if we can stabilize here and the market is not taking on any further momentum, then from here there's another push higher, probably not just towards 330, 350, but also towards 420 and above that towards the all-time highs, mainly depending on how things develop around China, how things develop around the US dollar in this context here when we talk about the DAX, how the euro develops. So if the US dollar can strengthen again and forthright its current let's say corrective move or stabilization against those lows here from 2017, then there is probably a push towards 119 and probably below that, even below that, possible in EUR/USD. And with this in mind, and knowing that right now DAX and the euro are negatively correlated to each other, such a push lower in the euro could lift up the DAX a little and make it more likely that we push towards the all-time highs. Even though, on the other hand, we shouldn't forget that US equity markets are still very extended on the upside. So yes, on Tuesday there was a strong push higher. The S&P, for example, the S&P closed the 6th time in 2018 with a new all-time high. That was a record. We tied this record now with 1964. That was the first and the only time before that. Even though we have to remember that also the VIX, the volatility spiked higher on Tuesday, and indicating already that there is something around the corner which could cause a near-term corrective move. China was a potential trigger, even though the market did not take on further momentum on the downside. Nevertheless, we're probably not yet done in terms of a chance to get to see a near-term corrective move, for example, in the Dow Jones, in the S&P. And this is also something we should also take into account when considering aggressive long engagements in all equities. It's not just the Dow Jones or the S&P, but also, for example, European indices like the Euro Stocks or also the DAX here. And that's something you should also have in mind when considering long engagements, even though, again, yes, yesterday looked as if we have more potential on the downside, and yes, we are not yet done. So to be honest, I mean, what we've seen is a push above the highs from December here, but only a slight push, no further upside momentum. So all in all, the overall mode in the DAX can still be considered choppy sideways. But choppy sideways does not mean bearish or bearish outlook, because bearish, I consider DAX to be or yeah, to probably see the bears taking over if we push below or make new yearly lows here, pushing below 12,700 points. In this case, now you can see also here we have the 200 simple moving average here around this region. So this would definitely suggest that the market is about to probably see another leg lower. But right now, chances are higher currently that we push towards the all-time high than to see a push here on the downside. That's also something we have to mention, even though today I step back from any setup here because chances are high, to be honest. Yeah, I think I consider them right now to be higher, that we see another push towards 13,200 and lower than that. Then I consider chances to be high or better that we push higher. So overall, if we take a step back, chances of a new all-time high in the near term are higher than to see a leg lower below 12,700. Even though intraday and in the microcosmos here, we should say, okay, chances are higher probably that we see another push lower, since there's still this fear around the message or the news yesterday around China. So that's it on the DAX. So all in all, let's see. I still don't want to formulate a trading setup here. Probably I go for such a setup if we push lower towards and slightly below 13,200 points. But right now, I think it's definitely better to just step back. Same is true, by the way, for the euro after this push yesterday. So, or let's have a look here. The 4-hour chart. I consider another attack at the level around 121 to be likely once the market can come back or can push back above the highs from yesterday around 120.20. So far here, it seems, and as long as everything stays calm, let's say, chances are not that low, to be honest. So in fact, they are quite high. I think that there will be another push towards 119 and probably below that level, even though everything above 119 and everything below 120.20 should be considered neutral, respectively, not really bullish, but not nearly bearish too. So all in all, the overall mode on the intraday and lower time frames between 119 and 120.20, yeah, the mode should be considered neutral. My personal take is, by the way, that everything above 117 in the Euro USD is bullish. So this picture hasn't changed, meaning even if we are now dipping a little lower and push towards and below 119, that does not necessarily mean that we are not seeing another push towards 121 in the near term. Based on the positive correlation between pound sterling and the euro, the same is true for pound sterling against the US dollar. So there was this slight push below 135 here in the morning, even though, as you can see, the market, the pound sterling does not take on further momentum on the downside. So chances are given that we are probably about to see a bottom forming in the lower time frames and taking off from there, then towards 136, 136.50 and push above that means that in the upcoming months we could definitely push it towards 140 here. The highest levels last time seen in 2016. That was before the Brexit vote here. And yeah, so that's it in fact on GBP USD. I personally think dollar Japanese yen, we talked about this already. I'm very skeptical about the US dollar, not just because of China, but also in general. That was something which became clear definitely over the last weeks, I think. Nevertheless, some might argue that probably the Japanese yen, nevertheless, is probably an interesting short candidate. I don't think it's a short candidate against the US dollar. That has mainly also to do with the fact that here we have a sentiment extreme. So market participants in the commitment of trades report show a very aggressive short exposure. But what I think is interesting is CAD Japanese yen, which could see another very, very attractive push towards and probably above the highs from 2017 here. So we saw a first attack that was last week on a Friday, and then we're sold off. And I have to say, I really like this push lower here, especially yesterday, this aggressive push lower, and probably also here we are not yet done. So there's another chance that probably CAD yen will push a little lower than that. Nevertheless, I definitely have a pattern, a seasonal pattern on the agenda here from the 23rd of January. So from next Tuesday, it's next Tuesday, and then not next Tuesday, but the Tuesday after next week, and then till mid-February, we've seen a very a bullish environment here, usually over the last 20 to 22 years. That's not just true for CAD yen, but also for CAD franc, Swiss franc, and with this in mind, I really consider long engagements here in CAD Japanese yen. Depending on what the US equity markets, respectively equity markets in general, risk aversion around the market participants and so on shows, because this is only a problem, not only, but this is most of the time a problem when you're shorting Japanese yen. You definitely don't want to be short in a risk off market environment, since usually you see carry trades being let's call it abandoned here, and Japanese yen strengthening based on that fact, and that's something you don't want to be CAD yen be long in. But as long as we trade above 86.70 here, the lows from November, the lows from November here, I think there's a good chance that there will be a push towards these highs again. And if we clear this level and make it above 93, there's further potential in the upcoming months, then probably up to 100. And CAD yen is definitely something worth watching, especially also, and that's something where it somehow depends also, let's say, it somehow depends also on what next week on Wednesday will be delivered from Bank of Canada. If they come out more restrictive and suggest further rate hikes in 2018, you remember that in July, was it July? I think so, yes. In July and September, we've seen 2 rate hikes which weren't expected. If this is coming out here and they some kind deliver some more restrictive rhetoric, I think Canadian dollar could really take off, and this could then be the trigger for further strength here in the upcoming weeks, probably. And CAD yen in combination with the bullish seasonal pattern could push us towards and above the yearly highs from 2017 here. So this is definitely a currency pair, even though a very exotic one, but a currency pair I'm currently watching. So, and so in fact that's it. So let's have a look here at gold again. Nothing special, to be honest. So gold is stabilizing around 1,320 USD here. I still consider gold long-term or mid-term, let's say mid-term for the upcoming months, like 6 months or so. I consider gold to be bullish, even though I'd really appreciate to see a push towards and below 1,300, and going long or hoping for the chance to get long gold against 1,280, 1,285. But therefore, we still have to be patient. And that's it. Yeah, that's it from my end. So happy trading. Watch your stops, and talk to you again then next week. No, I'm sorry, not next week. Tomorrow. Tomorrow is Friday, and then next week. So tomorrow at 10:30 a.m. GMT. And that's it from my end. So happy trading. Watch your stops. If you have any questions, please shoot them over. Feel free to contact me, and have a nice day. Take care. Enjoy yourselves. See you, and bye-bye.